Good day and welcome to Long-Term Product Solutions. We're going to discuss Class 3, which is part of the Class of Business series. My name is Johan Kluter. I am the Managing Director of Integrity Academy, and I will be leading the discussion in this next session. Right, let's have a look at the content that we will be discussing throughout this whole session. The first one would be Unit 1. Where we will discuss the general principles of insurance planning and risk management. Now, this is a very important session because it covers a lot of fundamental issues that you need to know about insurance and life insurance as a whole in order to function properly in the industry. Then we're going to look at Unit 2, which is your insurance products and the Long-Term Insurance Act, and where these products are affected by the Act and how they fall within the ambit of the Act. And then we'll look at Unit 3, which is the application of structured long-term insurance policy products. So that's where you're going to look at how do you apply them to the various portfolios of clients and the needs of clients. All right, but let me first introduce you to the subject, class of business. And what is class of business? Right, on the next slide, we have a definition here. Class of business is an industry classification of insurance products according to the perils insured and the exposure. The purpose of classifying the insurance business is to group homogeneous risks for the purpose of rate development. Unlike product training, class of business training includes training on product features, including the typical fee structure and the suitability of different products or features for the different types of clients. Class of business training also looks at the impact of current events on these products. Current events are not limited to technology, like robo-advice and so on, socio-economic, socio-political, and then obviously legislative changes. The structure of the financial services industry falls under the next sectors. The financial services sectors are made up of the following sectors, and we'll discuss this in more detail in a diagram that I'll show you on the next slide. The first one is the insurance sector, consisting of life and non-life insurance. Then your healthcare sector or healthcare benefit sector, which is the medical aid schemes. The banking sector, which is the lending, deposits, withdrawal and financing sector. Your credit providers, which is under the NCA, National Credit Act. They are strictly for lending and financing of personal and business projects. Then your pension and collective investment schemes invest in investments, and we'll look at that also. And then your JSE or your Johannesburg Stock Exchange, which is a multi-asset security exchange, which deals in bonds, equities, options, calls, puts, and various other items they trade in. But on the next slide, we will see here is the financial services sector in South Africa. Insurance is one of these. That's made up of your long-term assurance sector, where you've got your life assurance products covering the lives of individuals. Then your assistance business, which is mostly your funeral insurance business. Then you've got your short-term insurance industry, which deals with personal lines insurance. Now, personal lines insurance is cover for motor cars, household content, furniture, your leisure boat, and so on. And then you've got your commercial lines insurance sector, which deals with factories, buildings, commercial items like ships, bridges. When they are busy constructing a site, they will insure that construction. Then there is the healthcare benefit sector, where your medical schemes fall under. Your credit sector, which I mentioned, is under the National Credit Act. Your banking sector, they fall under the Banking Act. And then your pension fund benefit and collective investment schemes, they fall under the investment sector, because the funds in the pensions must invest somewhere their money. And the same with collective investments, which is a group of various investments put together in one collective investment. And then finally your JSE or Johannesburg Stock Exchange, which deals in shares in listed companies. Right. On the next slide, we're going to look at the legislative part and where this falls into the legal structure of the financial services sector. Healthcare benefits or medical schemes fall under the Registrar of Medical Schemes, and they fall under the Medical Schemes Act 131 of 1998, and also within the Council of Medical Schemes, or the CMS. Then you've got your Johannesburg Stock Exchange, or JSE. They fall under the Financial Markets Act 19 of 2012, and they resort under the supervising body, which is the Financial Sector Conduct Authority, or FSCA. Then you've got your assurance sector, which is life assurance, and your insurance sector, which is non-life insurance. Both of these resort under the Insurance Act 2017. For the life assurance, it will be changed into the Long-Term Insurance Act, and for the short term, it will be into Short-Term Insurance Act. They both fall under the FSCA, which is the Financial Sector Conduct Authority, and they're licensed by the Prudential Authority, which is the Reserve Bank. Then you've got your banking, which falls under the Banks Act of 1990 and the Financial Sector Regulation Act 9 of 2017. They also resort under the regulatory bodies, which is the FSCA, Financial Sector Conduct Authority, and they're also licensed by the Prudential Authority, which is the Reserve Bank. Then your retirement industry, which falls under the Pension Funds Act 24 of 1956, and they resort under the Registrar of Pension Funds. Collective investment, which falls under the Collective Investments Control Act 45 of 2005, and they fall under the Registrar of Collective Investments, and their classification is done by CISA. And then you've got your credit section, which falls under the National Credit Act, and they fall under the National Credit Regulator. Right, who is the National Credit Regulator? The National Credit Regulator, NCR, was established as a regulator under the Medical Credit Act 34 of 2005, which we can call the Act, and are regulated by the South African credit industry. It is tasked with carrying out education, research, policy development, registration of industry participants, investigating of complaints, ensuring enforcement of the Act. The Act requires the regulator to promote the development of an accessible credit market, particularly to address the needs of historically disadvantaged persons, low-income persons, and remote or isolated or low-density communities. The NCR is also tasked with registering credit providers, credit bureaus, and debt counselors. You can find more information on their website, www.ncr.org.za. Right, then the Commissioner. The Commissioner is a natural person appointed by the Minister of Finance in terms of the Financial Sector Regulation Act to regulate the conduct of product suppliers and FSPs. The Commissioner was previously known as the Registrar. The Commissioner is a regulator for the financial services sector in South Africa, whose job it is to promote fair customer treatment and the efficiency and integrity of the financial markets. A Commissioner works closely with the Deputy Commissioner to ensure a close working relationship between the FSCA and key stakeholders in the financial services sector, including the National Treasury, South African Reserve Bank, the National Credit Regulator, and the Financial Intelligence Center. They are also responsible for ensuring the FSCA participation is properly represented in local coordinating structures and the relevant international forums. The current Commissioner for the FSCA is Mr. Abel Sitole. Right, who is the FSCA? They are the Financial Sector Conduct Authority, which is the market conduct regulator of financial institutions providing financial products and services. So that's the grouping within which you function. These financial institutions are licensed in terms of a financial sector law, including banks, insurers, retirement funds, administrators, and market infrastructure. The FSCA is responsible for market conduct, regulation, and supervision, The FSCA aims to enhance and support the efficiency and integrity of financial markets and protect financial customers by financial education. The FSCA will further assist in maintaining financial stability. The FSCA was previously known as the Financial Services Board, or the FSB. Their website that you can find more information on is www.fsca.co.za. Right, who is the Prudential Authority? The Prudential Authority, previously all banks were regulated by the Banking Supervision Department of the South African Reserve Bank, the SARB, and all non-financial institutions, FSPs, insurers, pension funds, collective investment schemes, and market infrastructures are regulated by the Financial Sector Conduct Authority, with each institution complying with its industry-specific pieces of legislation. So the Prudential Authority is basically the Reserve Bank. But the insurance industry has split into life and non-life insurance, also known as long-term and short-term insurance. The Insurance Act 18 of 2017 defines life and non-life assurance businesses as follows. Life assurance businesses means the activity conducted to enter or meet insurance obligations under a life assurance policy. Non-life insurance business means the activity conducted to enter or meet insurance obligations under a non-life insurance policy. Non-life insurance policies means an arrangement under which a person, in return for the provision being made for the rendering of a premium to that person, undertakes to meet insurance obligations that fully or partially indemnify the loss on the happening of an unplanned or uncertain event, other than a life event, because this is short term, a death event or disability event not resulting from an accident, and includes renewal or variation of that agreement. According to the Short-Term Insurance Act, a short-term insurance policy means an engineering policy, a guaranteed policy, a liability policy, miscellaneous policy, a motor policy, accident and health policy, property policy or transportation policy, or a contract comprising a combination of any of these policies. It includes a contract whereby any such contract is renewed or varied. Short-term insurance products are sold under the different classes of insurance, and that is what we call Class 1 for short-term personal lines and Class 2 for short-term commercial lines. Let's look at personal lines. In personal lines insurance, the products are house owners insurance, house content insurance, motor insurance, which includes trailers, caravans, golf insurance, all risk insurance, watercraft insurance, that's like for little small boats that you go and play on the dam with, personal liability insurance. It's not a standalone policy, sold with buildings, content, motor and watercraft insurance. So it's part of this personal lines policy. Let's say your dog would bite somebody entering your yard and they put a claim in against you for, let's say, 2, 3, 4 million, and that amount is covered under your policy. They can then claim under personal liability insurance. Or somebody stays at your house, they slip on your floor, break their leg or injure their knee seriously, and they need to go for surgery, and they then put a claim in against you for not having a safe place. Right, life and non-life insurance companies register with the FSCA to get their operating license. An application is submitted to the Commissioner of the FSCA. Several licensing requirements should be met before a license is granted to an applicant. These requirements are specified in the Financial Services Advisory and Intermediary Services Act 37 of 2002, also referred to as the FASE Act. The licensing requirements are as follows. You must comply with personal character qualities of honesty and integrity, which means that you must have no fraud committed, no criminal proceedings against you, and be in good standing. Right, then secondly, competence, which includes your experience, certain qualifications, regulatory exams, class of business, and product-specific training, and have the correct knowledge. Operational ability, that's having a desk, table, chair, office, telephone, fax machine, if you need that, a printer, whatever you need to be operational able. And then financial soundness of a business, which means that the business itself must have enough funding or finance to run the business and not be in trouble so they can't pay claims out to the client. And then finally, continuous professional development, which includes workshops, seminars, and courses. I mentioned qualifications there. Qualifications are excluded from continuous professional development in specific. So it is workshops, seminars, and courses which relate to the category one has been licensed for. So if you are licensed for, let's say, short-term or personal lines or commercial lines or that kind of insurance, then it would be best to do your professional development credits also around what you are operating in, and not do something on health if you don't use health in the short-term space that you're working in. Right, let's have a look at the next slide. Now, this one is a very, very busy slide. And I'm going to try and discuss this with you. This comprises of the various categories, license categories. The first one is your category 1 or ordinary FSP license. And please just follow me with this slide. Category 1 or FSPs that render ordinary financial services in that they can only act on clients' instruction. We can distinguish here between advice and intermediary services in this category. Advice is where the representative gives specific advice to the client, and intermediary services is where you've got a broker consultant that come and see you as the advisor or the broker and tells you which products you can go and sell to the client. Advice is any recommendation, guidance, and or proposal of a financial nature furnished by any means or medium to any client. Intermediary service is an act other than giving advice, where a person acts on behalf of a client, like a broker consultant acts on behalf of a FSP, and he then come and explain his product to you so you can go and sell it to the client, and obviously you as the representative then provide the advice. So these individuals fall in category 1, or they are ordinary FSPs. Then you get your category 2 license, which is a discretionary FSP. Now, a discretionary FSP renders intermediary services of a discretionary nature regarding the choice of a particular financial product, but without implementing any bulking. Now, we'll discuss bulking. According to the Code of Conduct for Administrative and Discretionary FSPs, bulking means the aggregation by an administrator FSP of a client's funds when buying or investing in financial products on behalf of clients, and the subsequent allocation of such financial products to each client separately in the records of the FSP. B, the financial products belonging to a client when selling such financial products on their behalf, and the subsequent allocation of the proceeds of such sale to each client separately in the records of the FSP. Then we get a category 2A, which is hedge funds FSPs. Now, the word hedge funds FSP tell you that they are selling hedge funds. So a hedge funds FSP render intermediary service of a discretionary nature regarding the choice of a particular hedge fund or fund of hedge funds regarding a particular financial product. Then you get your category 3, which is your administrative FSPs, which more in the administrative side of the business. And administrative FSPs renders intermediary service in respect of financial products on the instructions of a client or another FSP, as though through the method of bulking. And then you've got your category 4, which is your assistance businesses, which is your funeral type of policies. An assistant business FSP perform an administrative function or administration of assistance policies, and includes a person who is a binder holder as defined in the regulations under the Long-Term Insurance Act, where that binder holder performs such an administration. Right, so an administration of assistance policies means working performed by a person relating to the affecting or offsetting of claims, processing of claims, or the payment of fees or commission in respect of an assistance policy. Offsetting of claims means the payment of policyholders' claims and offsetting such claims against premiums received from the policyholder for the remittal of such long-term insurers. Right, so on the next slide, which is a bit less busy, we will discuss the various role players. A, the insured, the person whose life is covered in the insurance policy. B, the policy holder, the one who buys an insurance policy and the cover is issued in their name, and then the beneficiary, a person nominated by the policy holder to receive the policy benefits when the policy holder passes on. Next, you've got your key individual. The key individual, or the KI, are responsible for managing and overseeing the activities relating to the rendering of any financial services, and normally a representative will then report to a KI or a key individual. KIs have an enormous responsibility to carry out their duties with the necessary due care, skill, and diligence. The key individual must meet certain fit and proper requirements as per the FASE Act. U then is the intermediary, which means that any person, including a person employed or mandated by such a first mentioned person, which is the key individual, who renders a financial service to a client for or on behalf of the financial services provider or FSP in terms of the conditions of employment or any other mandate, but exclude a person rendering clerical, technical, administrative, legal, accounting, or other services in a subsidiary or subordinate capacity. So a clerical person or somebody that's in a support function to you, they don't provide advice to the client, and therefore they are not part of the term intermediary. The representative must meet certain fit and proper requirements as per the FASE Act. Right, then you've got your financial services provider. They are the FSP, or the which is the business offering the financial advice and or intermediary services such as brokerages and insurance companies. Your compliance officer, they are a natural person that monitors the compliance function of the FSP with the requirements of the FASE Act and other subordinate legislation. In terms of the FASE Act, the following roles are explicitly mentioned in the legislation: the monitoring of compliance within the FASE Act, submit compliance reports and other compliance-related reports to the Commissioner. They must take responsibility for liaison with the Commissioner, supervise the compliance function with established by the FSP. They must act with diligence, care, and a degree of competency required from the compliance officer. They must provide the FSP with a written report, at least quarterly, indicating the course of and progress achieved with the compliance monitoring duties, and make recommendations to the FSP. The compliance officer must meet set, fit, and proper requirements as per the FASE Act. Now, one day when I was at the FBI conference, somebody asked the lady at the FSCA, actually made the statement by saying, "You will never know when we are doing wrong within our practice." So she said, "Because you never come and visit us." So this lady said to her, "But it's not my responsibility to find out your wrongdoings. It is your compliance officer's function to come and tell me that you are doing wrong, and then I will come and do an audit on you, and then I'll catch you out." Right, the Ombud for the FSP. The Ombud considers and disposes of the FASE complaints in the internal FSP complaints procedure. And if the FSP fails and the complainant wants to pursue the matter further, then they can go to the FASE Ombud. The regulators in South Africa, there is a twin peak regulation for financial sector. This means that there are two regulators. The one is the Prudential Authority, or the PA, and the other one is the Financial Sector Conduct Authority, or the FSCA. The PA is mainly responsible for prudential regulations, which looks at aspects like solvency ratios, meeting capital requirements by insurers, which in contrast, the FSCA regulates the market conduct and the consumer protection. Right, the life underwriter. The underwriter is a process where the insurer checks who qualifies for insurance and how much they qualify for. Right, insurers set their pricing based on average risk. Underwriters must find out which people stand out from the average and charge them the correct premium for their unique risk. It keeps life insurance premiums fair to everyone. So if somebody's got heart problems, diabetes, and so on, there might be a loading on his policy, which means he pays a little bit more, where you, with a life that it's got no risk on, will pay then a little bit less. So it's just to make the insurance premiums fair to everyone. While underwriting can seem painstaking, the process is streamlined as far as possible by only asking the essential information required to initiate the policy. Truthfulness, comprehensive disclosure is imperative for underwriters to make accurate assessments. So when you complete an application form and there's medical questions, please answer them truthfully and as correctly as possible, because that will help the underwriter to do their function properly. A life underwriter is a person who stands in between the life insurance company and an insurance agent to evaluate whether an applicant for life insurance may pass for acceptance. An underwriter function determines the amount of premiums the applicant will pay. Right, the claims processor. The insurance claims processor evaluates whether to issue a payment and for how much on an insurance claim by a policyholder. Sometimes claims processors work with investigators to establish the validity of the accuracy of claims. Then they will determine whether the claim is valid or not. The claims processor ensures that all necessary forms are included and the documentation is complete. He or she then issues payment following the individual policy involved in the claim. In the next section, we will deal with detailed claims procedures and required documentation for the life risk policies and assistant policy claims. Thank you for attending this session. We'll see you in the next session then.